Guys, welcome back to the channel, welcome back to a new video. This is a little bit of a intermediate emergency video, not about the prices but just about important news that came out from Europe, where the central banks having a talk with the Italian government, because it looked like that shit just hit the fan. And we are going to dive right into a news article that I just saw, and I really want to share this with you because this could cause a domino effect in the rest of Europe, and who knows, maybe in the rest of the world. Let's dive straight in. I then need to switch my screen a little bit. I think now you can see a article from CNBC saying that the European Central Bank holds an emergency meeting to discuss a market route, and it's all about Italy probably need to restructure their debt, but it looks like they're already until here into debt, and that they can't do it. Well, this is a short video. I'm only going to play 1 minute of this. Please listen to this. The reporter here explains it exactly the way it is. Super simple to follow, and he right away talks about the essence of the problem here. Let's listen to this for just 1 minute.
Now, the Italian Prime Minister, I think the tolerance is less now, because I think that the Italian government has not repaired the roof while the sun shone. We've got 150% debt to GDP. We've got enormous refinancing. I think it's over 200 billion euros this year and goes up to about 250 billion euros next year as well. So we've got a problem here.
So they still have a lot of debt, and they need to refinance a lot of debt for next year.
If the spreads are picking up, if the absolute level of the yield is picking up as well, the financing costs are going up. Now, I hear that
so the cost of financing of the loans is going higher as the interest rates are rising.
The counter-argument, and I'll go through the counter-argument as well, and that is that the Italians have used that period in the last 10 years to extend the maturity of their paper. They've gone to over 7 years now. So let's look at that 7-year paper, and it's currently trading around about 3.75, 3.79 as well. So you can see the cost of financing the paper and the extra issuance that is needed every single year is going up, and it's going up quite a lot. And is that going to put in jeopardy the COVID recovery plan, the national recovery plan, and dare I say it, and I'm going to add this one in there because they don't want to talk about this in Rome, but we can talk about it on CNBC, political instability. I know that we've got this great technocratic government.
Okay, so long story short, the European Central Bank said we need to start rising the interest rates to fight inflation, the same as we now have seen in the United States, and most likely in, I think, what is it, 5, 6, 7 hours from now, the central bank in America will come out to announce that they're probably going to rise the interest rates with 0.75%. Now, Europe has said that we will most likely are going to do it, and we're starting off from July with the first rate hike, and then probably in September again, and most likely then afterwards the negative interest rate, yeah, believe it or not, exists. The negative interest rate in Europe is then gone, but for Italy, as you can see now on the screen, the 10-year bond yields are just rising. So what does it exactly mean? Well, if they have lent a lot of money from the central banks to finance their debt, because the interest rates are so low, again, because of all the money printing, supply and demand. If we just have a lot of supply and not a lot of demand, then the price is going down. So the cost of money, again, the interest rate. But once the central bank said, oh my god, we have so much inflation, of course they already knew that they were going to create a tremendous inflation by printing money. That is always imminent on each other. If you stop printing money, at some point you will get inflation. And now we have it, and like, oh, now we need to take liquidity out of the market, start raising the interest rates. And suddenly Italy is now raising the finger to say, oh, wait a minute, we got a problem here because we can pay the interest rate on 1 or 2 or 3%. But now here on the screen you can see that within a month you can see that the interest rate is just skyrocketing from 3 to a little bit more than 4%. And right now they're already saying, oh my god, this is going to be a problem. And let me quickly go back to screen mode, and therefore it's right away panic. So if this is just an Italian problem, Europe can solve it, and they could maybe kind of refinance the debt or kind of try to help them out. But if the interest rate is rising even more, then Italy is going to have a bigger problem, and who knows, other countries might follow as well, because you just saw that the debt was more than 150% of GDP, which is tremendously high. I think the target is always approximately 100%. So, and if then let's say Spain follows, or Portugal or Greece, like the little bit more of the weaker countries within the Eurozone, then you could really have this domino effect. And this is exactly where the financial system is then kind of putting into a halt, where the central banks are like, okay, we have the most critical decision to make. Are we going to raise the interest rates to fight the inflation, which will then cause most likely an economic recession, and which will cause these kinds of major problems that people cannot pay off the debt anymore? Or are we going to say, you know what, inflation is what it's going to be, but we are going to save these countries? I think they're going to choose the first, because if you have super high inflation, 20, 30, 40% for years in a row, it's the destruction of a modern capitalism. Everything that you have been working for, built for in the last few decades is gone. So high inflation or hyperinflation is absolute terrible. And that's why also the Fed is so fierce on this, to try to put the genie back into the bottle, which kind of right away reminds me of a saying that we have on Wall Street, saying inflation is like toothpaste. Once it's out of the tube, it's damn hard to put it back in. Well, that's exactly what is the case right now. So we're now seeing two camps, and right away this could be the start of absolute a shift here in Europe. Or maybe in the States, or who knows if this gets even out of hand, gets a domino effect in the rest of the world, because then we get in 2008 all over again, where someone is raising the finger and said, I can't pay the debt anymore, I'm very sorry. Let's say Italy to Spain, and Spain says, well, if you're not paying your debt, then I don't have money to pay off my debt, let's say in England. And England says, well, if I'm not receiving any money, I cannot pay off my debt in Germany. And you get this domino effect where no one receives any money anymore, and no one can pay off the debt anymore. And then the central banks will say, well, then I just give you free money so you can pay off your debt. You see where I'm going? So this is very, very interesting. I just want to give you that quick emergency update, because I know we're talking a lot about trading, but right now the markets are so volatile, and they are so emotional that the markets are just very much being led by the news. So this kinds of stuff leads the markets. Later on, the Fed, you bet your ass, we're gonna get volatility. The stock markets are going to do this. Same for crypto, it's going to do this at the minute that the Fed is coming out. So we're really seeing news is leading, then the stock market is reacting, and then usually crypto follows one way or the other, and the dollar index, etc., etc. So eyes on the price. Keep a broader perspective, know what is important, and by just looking at these videos and watching these videos, I hope you get a little bit of a better idea. Alright guys, you would highly do me a favor if you would like and subscribe. Really try to subscribe, because I see that we're getting more and more views, but just a fraction of you guys is subscribed. So please do me a favor, subscribe to the channel. Let's see if we can go to 100 subscribers at the end of the month. That will be nice. And of course, feel free to leave me a comment, or check out the links in the description. One is to my Twitter, Instagram, and also a handful of affiliate links. We also now have a deposit bonus for Bybit and VMix, so definitely check that out. If you make an account after your initial deposit, you're getting that trading bonus from the exchange, so definitely check that out. I will be back later on with another video just before or just after the Fed meeting, and then we're really going to look at the charts and the prices again, and I will update you on whatever I'm seeing in the charts and what could be maybe trading patterns, because Bitcoin is breaking important supports. So the question is, of course, how low can we go? Well, actually I made a video about that yesterday, so definitely check that out after this video. And then I'll see you guys very soon again. Thank you so much for your time and your patience. Thank you so much guys, and see you very soon again. Love you all. Bye bye.